Welcome to the debate. If you close your eyes and picture the epicenter of global wealth generation 50 years ago, you'd probably hear the deafening roar of a trading floor in Chicago, or maybe the mechanical thunder of a factory assembly line.
Right, lots of yelling, humans sweating, making physical decisions in real time.
Exactly, humans everywhere. But today, the true epicenter of wealth creation is entirely silent. It's just a server rack in a dark, temperature-controlled room. It's operating a completely closed-loop artificial intelligence system that generates pure profit without a single human ever intervening. We're looking at a reality where autonomous AI systems operate entirely alone across the global economy.
And it is a profound shift in how we fundamentally define work and really capital itself. I mean, we're not talking about autocomplete or, helpful chatbots anymore.
No, definitely not.
We are talking about algorithms unleashed on massive data streams, making execution decisions that immediately translate into cold, hard cash, and doing it at speeds no human brain could ever process.
Exactly. But this raises the central question we are exploring today. Does the rise of autonomous, profit-generating AI primarily represent a massive, macro-level consolidation of institutional and corporate power? Or, does it serve as a revolutionary micro-level democratizing force that is leveling the global playing field for everyday individuals?
It really is the defining economic question of our time.
I will be arguing that autonomous AI is fundamentally a macroeconomic force. By its very nature, it is centralizing unprecedented efficiency within massive, corporate closed-loop systems, effectively cementing economic power at the top of the food chain.
And I will argue the exact opposite. The true paradigm shift isn't what the massive entrenched corporations are doing. It's how these solitary systems empower everyday individuals to orchestrate automated, multi-stream global income, literally from a laptop.
Let's lay out our positions and look at the underlying mechanics here. When we examine the defining characteristic of modern AI, its core feature is the capacity to outpace human minds in both speed and scale.
Sure.
This naturally, structurally, favors massive institutional deployment. Consider the staggering scale of AI acting entirely alone in financial systems. You have Renaissance Technologies' Medallion Fund, which manages roughly $10 billion. Since 1988, they've averaged a 66% annual return.
Which is just unheard of. Yeah.
Right, and here is the kicker. Post-setup, there are zero traders intervening.
Right, it's essentially an autonomous wealth engine.
Precisely. But let's look at how it does that. The fund's models autonomously ingest satellite images of crop yields from Brazil, shipping logs from the port of Singapore, and social media sentiment from Weibo. The AI synthesizes all of these disparate data points and executes commodities arbitrage entirely solo.
It's a black box.
A black box of pure profit. And we see it in high-frequency trading, too. Over 70% of global equity trades are now AI-driven, executing in nanoseconds. Firms like Virtue Financial deploy co-located servers, meaning their computers are physically placed in the same buildings as the exchange's servers to eliminate even milliseconds of internet delay.
Right, literally shaving off the distance the light has to travel.
Exactly. They scan order books globally to spot microscopic latencies. By capitalizing on a 0.01% edge per trade, Virtue profited $1 billion in a single day during the 2020 volatility. When sensors feed models and trigger actions entirely without humans, that closed-loop solitude inherently cements economic dominance for the institutions that own those massive server farms.
The numbers on Wall Street are massive. I certainly won't dispute that. But I come at it from a different way, because I think you're confusing the volume of capital with the trajectory of the technology.
How so?
Well, the true revolution isn't Wall Street's feeding frenzy. The real transformation is the accessibility of these exact same autonomous capabilities to anyone with a 5G or Starlink connection, whether they are sitting in a cafe in Berlin, rural Kenya, or Brazil. Autonomous AI acts as a tireless employee, leveling a playing field that has historically been tilted heavily toward massive capital.
But hold on, I have to stop you there. How does a single individual sitting in a cafe compete with a billion-dollar high-frequency trading algorithm running on co-located servers?
By bypassing that specific game entirely and creating their own closed loops, we have individuals using APIs, application programming interfaces. Let's demystify that term for a second because it's crucial. An API is essentially a digital translator.
Right.
It allows two completely separate pieces of software to shake hands and sign a contract in milliseconds without a human presence. People are using APIs from companies like OpenAI and Stripe to chain together global workflows with maybe 5 to 10 hours of initial setup.
Give me an example of what that looks like in practice.
Take a Nigerian software developer who is effectively automating $20,000 a month in profit by using AI to run crypto-focused YouTube channels. He isn't manually editing videos. He wrote a script that monitors crypto news, synthesizes it, and outputs fully produced videos in both Yoruba and English.
Wow.
Or consider everyday retail traders using no-code platforms like PineScript on TradingView. PineScript is basically Lego blocks for coding. You don't need a computer science degree to use it. These individuals are building reinforcement learning bots that automatically buy low volatility stocks during the Tokyo market open and sell on European peaks, capturing 10 to 30% annual returns.
Okay, but
AI is the ultimate decentralizer of wealth because the barrier to entry has dropped from millions of dollars to the monthly cost of a basic internet connection.
those are fascinating individual use cases, and I don't deny the ingenuity there. But let's zoom out and look at the aggregate global value. McKinsey estimates that by 2025, AI will drive $4.4 trillion in annual economic value.
Sure, it's a huge pie.
And the vast, overwhelming majority of that is driven by massive corporate deployments, not independent YouTube creators. Let's talk about DHL's Resilience 360 system. This is an AI that uses what are called graph neural networks.
Right, which are incredibly complex to run.
Exactly. For our listeners, imagine a graph neural network as a massive, constantly shifting 3D spiderweb of connections. Each point on the web is a shipping port, a cargo plane, a local weather pattern, or a supplier's inventory level. When a geopolitical disruption happens in the Red Sea or a drought hits the Panama Canal, DHL's AI doesn't wait for a human manager to call a meeting.
It just reacts.
It automatically recalculates the optimal flow of thousands of tons of cargo across the entire globe. It reroutes shipments autonomously, predicts delays with 95% accuracy, and cuts corporate logistics costs by 15%. Or consider Amazon's recommendation AI, making 35 trillion decisions daily, automatically cross-selling protein shakes to someone who just bought gym wear, boosting total sales by 29%.
Those are impressive optimizations of existing corporate structures, certainly.
But don't you see the massive disparity in scale? If we are looking at the global economy, the individual AI user you described is essentially a person panning for gold downstream. Meanwhile, institutional AI is a fully automated multi-billion-dollar hydroelectric dam built upstream.
A dam. Okay.
It controls the entire flow of the river. The individual might catch a few flakes of gold in their pan, but the institution commands the ecosystem.
Value purely in sheer volume and corporate market cap. But the true value of a technological paradigm shift is in its disruptive capacity.
Disruptive how?
Those micro-entrepreneurs aren't panning for gold downstream of the corporate dam. They are building 1 million tiny automated water wheels. Sure, the corporate dam holds more water in one place, but these micro wheels can be deployed anywhere it rains, completely bypassing the dam entirely. Individual creators and dropshippers are using AI to render those massive corporate supply chains irrelevant.
Rendering Amazon and DHL irrelevant? How exactly does a solo operator bypass a global logistics network?
By replicating their exact capabilities from a laptop, a solo entrepreneur can use an AI tool like AutoDS to completely automate global order fulfillment. The AI monitors trending products, places supplier orders directly from factories in places like AliExpress, and tracks shipments to 200 different countries without the human lifting a single finger.
That's just logistics, though.
Furthermore, they use AI tools like Prisync for dynamic pricing. The software automatically scrapes competitor websites and adjusts prices in real time, hiking them up during U.S. holidays or India's Diwali.
You have an individual seller in Germany automating $10,000 a month in pet accessories using these tools.
Right.
They don't need a warehouse in Shenzhen. They don't need an army of merchandisers or a graph neural network tracking cargo ships. The entire infrastructure of global commerce has been digitized, broken into API components, and handed to the individual. That is systemic disruption, not just a few flakes of gold.
I see why you think that, but let me give you a different perspective on what makes these systems truly profitable and why that still favors the macroeconomic giants. The transition we are witnessing is about the complete removal of the human from the loop.
Okay.
True AI profitability relies on total human alienation from the process. Let's look at the maritime logistics space. Maersk has deployed AI that virtually captains massive container ships. But it doesn't just steer the physical ship, it autonomously negotiates port docking slots and fuel purchases directly with supplier bots peer-to-peer.
Wow.
The human captains on board do not micromanage this. The system works precisely because the human isn't slowing it down with manual approvals.
You're talking about removing the bottleneck.
I'm talking about removing human agency entirely. We see the same underlying mechanism in DeepMind's AlphaGo, which pioneered the reinforcement learning these systems use. For those unfamiliar, reinforcement learning is like putting a digital rat in a maze, but letting it run the maze 10 million times a second.
Right, it learns by doing.
Exactly. It burns its fingers on the wrong paths, remembers the pain, and eventually finds the absolute optimal route before it ever interacts with the real world. The AI interacts with its environment, self-improves through millions of iterations, and converges on optimal strategies without any human guidance whatsoever. It is a black box reality. The corporate dam doesn't just control the river, it makes human agency within that economic process completely obsolete.
I'm sorry, but I just don't buy that. Let me tell you why. You are equating the absence of a human doing the manual, repetitive labor with the absence of human agency. But AI doesn't remove human agency. It elevates humans to the role of orchestrators.
But if the system is self-learning, self-executing, and operating in a closed loop, what is the human actually orchestrating once the machine is turned on?
The architecture of the swarm itself. Look at frameworks like LangChain or AutoGen. A human doesn't just set up one AI and walk away. They chain multiple, highly specialized AI agents together.
Right, I've heard of this.
Let me give you a concrete example of how this workflow actually operates in practice. A human provides a single, overarching strategic prompt. That's their agency. That prompt triggers an AI agent to search an API and spot a rapidly trending topic on TikTok.
Okay.
That agent automatically passes the raw data to another agent like Jasper or Claude, which understands narrative structure and generates a highly engaging script. That script is then seamlessly passed to 11 Labs, which generates a photorealistic voiceover, and then to Runway ML, which edits the underlying video assets to match the audio pacing.
It's an entire production studio.
Exactly. Finally, another agent posts the video, analyzes the engagement data, and autonomously reinvests the ad profits into promoting the best performing content. The human hasn't touched the video editing software, but they designed the entire workflow. They are the architect of the automated swarm. That is the definition of enhanced agency, not alienation.
That is a highly compelling description of workflow automation, and I grant you that the individual's ability to chain these agents is impressive. But let's follow that exact logic to its natural conclusion. If these closed-loop systems, whether they are high-frequency trading algorithms executing in nanoseconds or an automated swarm of dropshipping agents, are acting in the wild without human oversight, who absorbs the risk? This brings us to the severe systemic fragilities of autonomous AI at scale.
Are you talking about market volatility?
I'm talking about catastrophic, cascading failures across our economic infrastructure. If you're listening to this right now and wondering why your 401k dipped inexplicably last week, there is a very good chance an AI acting entirely on its own made a nanosecond decision about a headline it read in Singapore and triggered a massive sell-off.
Yeah, that happens.
Because humans are alienated from the execution loop, when these autonomous systems miscalculate, the damage is immediate, massive, and highly centralized. We saw the prototype of this in the 2010 flash crash. Dueling high-frequency trading AIs, reading each other's phantom orders, temporarily wiped out $1 trillion of market value in a matter of minutes. No human made that decision. The algorithms simply reacted to each other in a closed loop of panic.
And the market corrected itself.
Eventually, yes. But the systemic risk remains. As we hand over more of our critical economic infrastructure to black box models, the potential for a single algorithmic hallucination to crash supply chains or financial markets grows exponentially. This is exactly why the EU AI Act has actively mandated high-risk tiers for autonomous systems deployed in critical infrastructure.
Right, and Brazil's LGPD requires audits too.
Exactly. I'm not convinced by that line of reasoning, because celebrating the agility of an unsupervised bot swarm completely ignores the collateral damage it can cause to the global economic ecosystem when it fails.
That's a compelling argument, but have you considered that highly centralized institutional AI is actually vastly more fragile than decentralized individual AI networks?
How so? A centralized financial institution has compliance departments, risk management engineers on standby, and immense legal liability. A single dropshipper running a swarm of AI bots from their living room in Berlin has none of those safeguards.
But a centralized system represents a single point of failure. If the corporate algorithm miscalculates, as you pointed out, $1 trillion evaporates in minutes. It's a monolith. Conversely, individual decentralized AI creates an incredibly fluid and resilient global economy. Take AI trading bots that utilize federated learning.
Let's define federated learning for the audience, because it's a critical mechanism here.
Absolutely. Imagine 1,000 chefs trying to perfect a soup recipe, but they are all in different kitchens. Instead of sending all their secret ingredients to one master kitchen, they just taste their own soup, write down what worked, say, a little less salt, a little more pepper, and they send only the recipe updates to a central cookbook.
So the data stays local.
Exactly. The master cookbook gets smarter, but the chefs never expose their private ingredients. That is federated learning. Individual retail traders using apps share their algorithmic trading strategies anonymously worldwide. The global model improves based on the community's collective data, but without ever exposing any individual's private financial data or centralizing the capital risk in one monolithic server.
But federated learning still relies on millions of individual actors deploying automated tools in highly volatile markets. Doesn't that just distribute the chaos? I mean, if everyone's bots are operating on the same updated recipe, don't they all run for the exit at the same time?
No, because they are adapting to hyper-local contexts. It distributes the adaptability, not the chaos. Look at micro-entrepreneurs using AI to adapt to their specific economic conditions.
Like what?
In Brazil, everyday retail traders use AI bots like 3 Commas to automate crypto arbitrage. The bot constantly monitors the price difference between Bitcoin on Korean exchanges and US platforms like Coinbase. It executes trades in seconds for 1 to 5% daily gains. Why are they doing this? Because they are using the AI to manage personal risk against the inflation of the Brazilian real, autonomously trading it for stable coins.
Interesting.
Or take Latin American direct shippers using AI to orchestrate fashion arbitrage. Their bots automatically source trending garments from Turkey and sell them to buyers in Mexico based on real-time social sentiment analysis. If one individual's AI strategy fails or misreads a trend, the macroeconomic system doesn't crash. The network simply routes around the failure. Millions of individuals acting as autonomous orchestrators make the global economy significantly more robust, fluid, and agile.
You are describing a fascinating ecosystem of microtransactions, and I concede that the resilience of distributed networks is a powerful concept. The idea of millions of automated water wheels capturing value in local streams makes intuitive sense.
Exactly.
But as we step back to look at the totality of our discussion, I still maintain that autonomous AI's true, lasting nature is found in its staggering macroeconomic scale. We are talking about systems like Stemink's Athena, which autonomously optimizes 5 gigawatts of battery storage across California, Texas, and Europe.
Yeah, that's huge.
It arbitrages solar gluts in Spain with evening power demands in Germany, trading power grids entirely solo. We are looking at Google's DeepMind AlphaFold 3, which operates independently to predict 200 million protein structures, generating massive pharmaceutical royalties as it iterates novel drug targets alone in the dark. These aren't just tools you chain together with an API.
Right.
They are an evolutionary leap in isolated institutional efficiency. The sheer gravity of these closed-loop, self-healing corporate systems inevitably centralizes wealth, pulling the economic current back toward the dam.
And I maintain that the ultimate power of autonomous AI lies not in its physical size, but in its unparalleled reach. The very fact that an enterprise-grade capability, the kind of logic that used to require a skyscraper full of analysts, can now be distilled into an API, makes this a global equalizer. We have tools like ChatGPT, Jasper, and 11 Labs acting as the great democratizers of our time.
They certainly lower the barrier to entry.
Exactly. A freelancer in India, a small business owner in Brazil, or a side hustler in Germany can now tap into automated, passive income streams that were once exclusively the domain of multinational corporations. It is permanently turning the traditional corporate hierarchy on its head, empowering anyone to build your own autonomous digital enterprise from the ground up.
Yet, despite our differing perspectives on where the power is ultimately concentrating, whether it's at the top of the corporate ladder or distributed among millions of micro-entrepreneurs, it is clear we converge on one fundamental reality: the mechanics of the closed-loop system itself.
Absolutely. The architecture where data inputs feed models, and those models autonomously trigger real-world actions, whether that action is buying a shipping container of oil, negotiating a port slot, or posting a fully produced YouTube video. That architecture is permanently reshaping global economics.
And crucially, it is doing so by structurally reducing the need for manual human labor in the execution of these tasks. The factory without lights is here. It is operating right now, whether it's owned by a hedge fund in New York or a solo developer in Lagos.
The automation of execution is no longer the future. It is the new baseline.
Which makes this topic so vital to dissect. The projections suggest that by 2030, autonomous AI agents could be managing up to 50% of global GDP slices. We are walking into a decade that will definitively reveal whether this technology acts as the ultimate centralizer of wealth, creating an impassable dam of corporate dominance,
Or if it distributes that wealth, arming millions of individuals with the tools to carve their own rivers.
The ultimate takeaway here is that whether you view AI as a corporate overlord or a personal employee, the era of human speed execution is over. The question you have to ask yourself is no longer, how do I do this task, but how do I design a system to do it for me? We leave it to you, the listener, to dive deeper into these mechanisms and decide where the current is flowing. Until next time, keep questioning the consensus.